All right, Tracy, this is a good one that's working extremely well in today's economy. We call this the ACE program. Basically, it's people that have a house where the mortgage value excuse me, is higher than the market value. And we refer to this as upside down. If you think about it, the seller is very motivated, but they can't sell it. Again, because they owe more than they're worth. So the ACE program works when we contact the seller and say the only way I could probably help you is to get a 10-year lease that gives the house a chance to appreciate to the hopefully market value at that time. The payments will be identical to the mortgage payments, and it will stay that way for 10 years unless the bank goes up on the payment because of real estate or taxes and insurance, and then that would make the payment go up. But the tenant buyer will understand that in advance. The good thing about this is working extremely well as long as we get the owner, the seller, to understand that they won't make any money on the tail end or monthly with the payments. This is designed just to satisfy their needs of being able to make payments to help them not go into a foreclosure. And basically it works like this. I get paperwork done with the seller, the owner, and tell them what I just mentioned. I will find a tenant buyer to put in their house with their permission. They will usually ask, how much is this going to cost me? And I will tell them nothing. The tenant buyer will pay for my fees. Also, the tenant buyer will pay the attorney fees. So there's no out-of-pocket expenses at all to the owner of the property. And if they agree to that, I do the necessary paperwork and then I start marketing for a tenant buyer. And basically I want a tenant buyer, and they're interested in this because they don't have to have a large down payment. All they're agreeing is to lease the house for 10 years. At the end of 10 years, they can walk away. It's not mandatory that they buy it. In fact, they could probably cancel a lease at almost any time by just giving a 30-day notice with the seller and they move. In that case, the seller might call and say, hey, they've moved. I said, you want me to find you another tenant buyer? And I go through the process all over again. And like I say, this has become very, very popular because the owner of the property maintains ownership. That owner will usually say, I understand the purchase price being the mortgage balance, but how about every month when a payment's made, my principal is reduced? I will say, yes, absolutely right. That principal reduction also goes to the tenant buyer. Sometimes they have a hard time understanding that. So I explain it like this. We'll call the seller Bob. Bob, when you make the payments with your money, the principal reduction goes to you. When the tenant buyer sends their check to you to make the payment, it's their money making the payment. So the principal reduction goes to the tenant buyer. So like I say, this is a new one Ron just came up with. It's working extremely well. And I think it'll work in this case, Tracy. The only thing is, if you want to do houses 500, $1 million, $2 million, it works. You just have to make sure that the mortgage payment is what a tenant buyer is willing to pay or able to pay. So that's the main thing with high-end houses. It can be very profitable, providing that it's done correctly.